This is Ambition Today.
This is family business, and this is for the family that can't be with us. And this is for my cousin locked down, oh, the answer's in us. That's why I spit it in my song, so sweet like a photo of your granny's picture now that you're gone.
This is Ambition Today. What's up, world? My name is Kevin Siskar, and this is Ambition Today, where we analyze success with the most ambitious people for the sake of entrepreneurial science. We unlock the secret lessons in which you can achieve success, grow your startup, accomplish your goals, and try to change the world today. Last episode, we talked to Paul Polizotto, who told us how he transforms advertising into real-world positive social change with his company, CBS Eco Media. It was such an inspirational episode. Seriously, Paul has some of the best energy I have ever come across in an entrepreneur. But today, we are joined by the one, the only, Jesse Middleton. He's a venture capitalist at Flybridge and also the co-founder of WeWork Labs. Today's episode of Ambition Today is brought to you by Audible. Visit audibletrial.com/ambition today to download and keep any audiobook for free. And TopTail. Visit toptail.com/ambition today to get a no-risk trial period of up to 2 weeks with the top 3% of developers and designers in the world. This is Ambition Today.
Looking to make your dreams come true? Needing that extra push to become more successful? Then you've come to the right place. Welcome to Ambition Today with your host, Kevin Siskar.
What's up, world? I am Kevin Siskar, and you are listening to Ambition Today. You can find me on Twitter at the Siskar, or you can also add me on YouTube as KR Siskar. All of the Ambition Today episodes are up there if you want to listen to them there as well. I blog about startups, technology, and life at my website, siskar.co, which is also the home of this very podcast. On today's episode, we are joined by Jesse Middleton. He's a venture capitalist at Flybridge and also the co-founder of WeWork Labs. Jesse, welcome to Ambition Today.
Thank you so much for having me, Kevin.
Awesome. So we're here at the Next Jump offices on 5th Ave here in New York City. I want to thank you for taking the time today. So where did you grow up, and were you or your family entrepreneurial while you were growing up?
Yeah, so I grew up in a small town outside of Philadelphia in a county called Bucks County, Pennsylvania. And my town was actually called the Village of Pleasant Valley. It was very small. My parents were actually small business owners my whole life. Interestingly enough, they've been together as a couple since my mother, I think, was about 14 years old. And they have worked together and lived together and raised my brother and I for the better part of at least now. I'm 30 today, so at least 30 years they've been doing that. I think they've actually been working together as well for even longer, which is just crazy to me to think about that.
What was their business?
They've had a number of businesses over my life. They began in the textile world and then ultimately moved into a toy company and a kids entertainment company. My father's actually always sort of enjoyed kind of working with families, and the two of them got together and they have an events company that goes up and down the East Coast, hosting kids entertainment related things at huge festivals in Philadelphia, New York, upstate, down in Baltimore, Maryland.
So when you were growing up, how did you perceive that? How do you think that affected you today?
So I think when I was growing up, one thing that's interesting about having your parents work together, live together, raise a family together for that much time is they are always home. And unlike my friends'
you can't
parents,
get away with anything.
No. So they were always home when we got home from school. They were always home when we went to school. They were also always home when we got in trouble at school. So they knew it happened. But I think it's watching them work together my whole life. Two things kind of struck me. I think even as a kid, I wanted to be able to work for myself. I like the idea of being so self-motivated. I like the idea of creating things. And I like the idea of kind of working on things that I really cared about. Fast forward many years, and WeWork's mantra is do what you love. And I think I learned to embody that back from my parents long before WeWork existed. So I think that was one thing. And the other thing was that I realized that you didn't have to take a traditional path. My parents didn't go to college, but their parents did. And my mother's sisters did. And my aunt, actually somebody who's kind of an inspiration to me for getting me to go into business, was the CFO of a publicly traded company that I didn't know a whole lot about as a kid. And I think that what I realized was that they all took different paths and they were all very happy. My parents are still together today, very happily together. And I just realized that I could kind of chart my own way and make something of myself. And so I strive to do that.
I love that understanding, and realizing that at such an early age has to be freeing.
My parents always said I was an old soul. I think what they meant is I didn't really like to hang out with kids outside. I like to sit in front of my computer, but they viewed it as me being an old soul, somebody that always wanted to be with the older people doing more. So I guess I was fortunate to have that.
That's awesome. I've sort of done that a little bit too. You can learn a lot more from older people.
I absolutely agree.
So I know you were ambitious growing up. I read that you actually started college while you were still in high school. Is that true?
Yeah. So I started at a local community college. I wasn't a very studious student in general through high school or through college, but one thing I did realize is that I wanted to continue to push myself to learn more, to do more. And so in, I think it was probably my 10th or 11th grade year, there was an opportunity to take courses at the local community college, which I started, and it counted as a couple of high school credits. And it also got me out of school, which was kind of cool. But it just didn't do another school, but it was with a bunch of people that were much older than I was. So yeah, I started that. I really didn't know what I wanted to do with my sort of life or my career, but did know that I wanted to kind of pursue something down the business route.
And then you went to Drexel. What was your major there?
I went to Drexel. I entered school for business management, and I actually shifted gears after my first term there into what they called management information systems, which was a blend of technology and business. And really, I had been using computers from a pretty young age. I was pretty nerdy, and I knew a lot about technology already. So I wasn't really looking to enter a bunch of comp sci, like beginner comp sci courses, but I did want to blend the idea of how were computers and the internet, how was it being commercially used? How are people measuring companies? You know, today we think about things when you look at any tech startup and you say, you know, what's your CAC, your cost of acquisition? You know, what's your LTV? These are things that are pretty common knowledge, and you see it on all the blogs. But I think when I entered college into that, it was, you know, we still really didn't have SaaS products. The cloud wasn't really a thing yet. And so it was something where we were learning a lot along the way. And I think that was more interesting to me.
So after college, you started your first company. What was that company, and what was the result?
Well, so two things. I actually started my first company before I went to college, which was this company, Get It Connected. It was a web hosting company. And we, my best friend in high school and I think we were just looking to find a way to make money. We didn't really have a passion for the space. It blended technology and business. And so we started a web hosting company at sort of the peak of extraordinarily inexpensive web hosting. So this was a moment in time where most of the ads were like pay a penny for lifetime web hosting, which is obviously now I know is not a good business model. But at the time it seemed great. We hosted all sorts of interesting sites. And I think I learned a lot about self-management there. I learned a lot about customer interaction. You know, when somebody's website goes down, it's their livelihood. You know, the shit hits the fan, and you got to learn how to deal with that and how to maneuver it. When I went to college, though, I shut that company down. We sold off the assets, and I realized that I wasn't going to be able to do both at the same time, or at least I didn't think I could. And I think that was probably right, because I spent a lot of time drinking in college and having fun. And so I don't know that I would have spent all that time doing that if I was still running a company.
Right. But you've definitely kept busy. So you've been involved in numerous companies throughout your career. I read a Fast Company article that compared you to Jack Dorsey, the CEO of Twitter and Square. At the time, Fast Company said, Jesse Middleton juggles 3 New York City startups and makes Jack Dorsey look lazy. That was the headline. So before we move any further and get into WeWork, from all those other companies between Get It Connected and WeWork, what story stands out the most from those other companies?
So I think it's kind of a meta story that I look back on. And that article was actually an interesting mental turning point for me. It was a weird day to see that headline come out, and you've dealt with, you know, journalists before, and it's the way, you know, you write headlines after the fact. It wasn't a problem. But what's interesting is, you know, I was far less successful than Jack Dorsey at the time. So he had many more things on his plate than I did that were a much larger scale. But the thing that I learned from working on 3 companies kind of in a row after I left LivePerson was that I used to wear it as a badge of honor to be extraordinarily busy, you know, to not do one thing at a time and do it well. And I think at different stages of a company's existence, that becomes very interesting. During a point in WeWork's existence, you know, I had 2 or 3 different roles there. But when I was running these companies, I was a founder of an early stage startup with investor backing. And the best thing I could have done was actually chose one and really focused on it. And I think they all suffered because of the lack of focus. And it took me a little while to learn that, over the course of a year or two. And ultimately, I think I came out of those businesses in a much better place and a much better understanding where my strengths and weaknesses were. But I think that idea of focus is much more important than people think at the early stage of a company. When you get a bigger team and you're making money, you can start to spread out a little. You can do more things. You hire teams that can help you with some of the challenges that you were facing. But in the beginning, you need to both be focused as well as very diligent in solving each problem. But you need to make sure that every day you're maximizing, the value you're giving to the company.
That's so true. And I think it's sometimes even almost, you have to develop that skill, like you said, over time. You think you're doing things that are synergistic or in the same lane, but they're not.
They rarely are. I had a company pitch me recently with two vastly different concepts that shared one common sort of product thread. And I say thread, it was very narrow, but they had woven a story out of it that brought them together. And from the outside, it was abundantly clear that they were not the same business, not the same challenge, not the same customer, not the same revenue model, just nothing.
Yeah.
But internally, you can quickly find yourself rationalizing why doing these multiple things at one time could be valuable. I'm sure there are examples where that is true. I think more often than not, it's not, though. And I think that most people would be better suited at focusing on that one thing at a time.
So how did you get involved with WeWork? And how did the Startup Focused Labs program get started? Yeah,
so WeWork was an interesting thing. I worked out of a space called Dogpatch Labs here in New York City. It was an incubator space backed by Polaris Venture Capital. And when I moved out of there after I'd started my company and raised a little bit of money, I was looking for a place to work. And a friend of mine told me about this space that he just found on Craigslist called WeWork. There was a building in Soho, Grand and Lafayette. It was a single floor. And I went and looked at it.
I remember that building.
It's still a wonderful building. Has a beautiful retail space, coffee shop downstairs now. But I walked into that building and was like, wow, this is really cool. However, I don't want to be at this stage in building a business. I don't want to be in a glass box, which is what kind of WeWork is known for, having these glass offices, which are beautiful, they're functional, but they're made for teams of 2, 3, 4, 6 people. And for me, it was my co-founder and I, and we really liked the idea of an open space where we could collaborate. So we got talking to the two founders of WeWork, Adam and Miguel, who had just launched this very first floor and had ambitions to be in every major city everywhere in the world and being the world's largest network of these entrepreneurs and small business owners and creators out there. And we got into a conversation where they said, look, we want to have some young tech companies here. We're going to need to build some technology. Maybe we can learn from you. Maybe you can learn from us. And would you be willing to invite some other early stage tech companies to come work out of the space with you? And they gave me, my buddy Matt and I, they gave us a half a floor in that building on the second floor that was open. And we left it completely open for 47 people. And our first 45 friends moved in with the two of us. And we were all working on interesting, early companies. Many of those ideas shifted, over the course of a month or two. We were helping to incubate the concepts. We were bringing investors through to meet these companies. We were doing demo days where they could actually learn how to pitch. And a lot of it was just community members helping community members. That was the focus.
And so you got hired at WeWork, or you were just grinding this out, just doing this for the sake of the community?
We started as friends and kind of advisors and maybe consultants but we were not hired by WeWork in the beginning. And so it was an interesting setup where Labs was this separate concept that we worked on with the founders of WeWork. We'd build it inside of WeWork, hence the branding made sense for us. And ultimately, a couple of years in, we brought these concepts together, and Matt and I eventually did join WeWork full time. But it's an interesting lesson that I learned was that in the earliest days, there's a lot of trust that happens. Before you start a company, we talked briefly before we got on this podcast about the way that FI helps companies, and it's even when it comes to forming the company and incorporating them. In the earliest days, you don't have paperwork. And even if you do have paperwork, there's no legs to stand on, right? If you're two people with an idea, there's nothing to take from the other person. There's no value there. And so when we started Labs, we started as sort of a handshake deal. It was, hey, we were going to build this cool community of young startups. WeWork has the space and some of the infrastructure. They had not yet raised any money, so it's not like they had a ton of capital, but they were able to pay for beer and a few other things that people needed. I say needed,
yeah,
definitely needed. And ultimately we built this thing together. And I think the brands were very synergistic. The audiences were really valuable. Some of the earliest stories about WeWork came from those WeWork Labs companies. Today, there's a couple of great companies. One still here in New York called Handshake, another one out west called ToutApp that's backed by Andreessen, that have grown up. And these earliest stories were these young founders in this really cool space in Soho, creating, their dreams, creating what they wanted to create and making the world a better place while doing it and working with others. And so I think it worked really well. And we were very lucky to have been a part of that journey at that stage. And a couple of years later, Adam and Miguel, invited us in to really become a formal part of the family. And it's been an amazing ride since.
I love that you just got going and you just started. You didn't wait for some, I feel like sometimes people try to over negotiate things too early, and just get going, just start, right? And let it grow. Yeah.
My wife and I had a conversation over the weekend about this, that a lot of times you try and over optimize too early. And you do this. I mean, we find that we do this in our personal life, even, you say, well, maybe we could save $50 by making a stopover in Minneapolis on the way to San Francisco. And, rarely is that the best idea. And we have a newborn now, so having a stopover thank you. Having a stopover is even harder now. But I think, something that my friend Matt taught me, and Matt and I have now co-invested in a ton of companies together, and we've built a lot of things together. But Matt taught me kind of early on to just kind of have faith and to create what we wanted to create, and to kind of not worry about all the noise surrounding it. And kind of, if it's meant to be, it's meant to be. And they talk about when you meet your founder, it's very much like dating. A co-founder is dating, and then it's very much like a marriage, although sometimes even harder to get out of once a company gets even larger and there's a lot more paperwork involved. But ultimately, in the earliest days of dating, it's have faith that it's going to work. And I think it's true when starting a company just as much as it is when dating, my now wife, but who was my girlfriend back, 11 years ago.
Couldn't agree more. So let's take a quick break. We're here with Jesse Middleton talking about WeWork, and we'll be right back with more about the explosive growth of WeWork, venture capital of Flybridge, and more right after this.
This is Ambition Today with Kevin Siskar. We'll be right back.
Ambition Today is happy to partner with Audible. Visit audibletrial.com/ambition today to keep any audiobook for free. Jesse, do you use Audible?
I do.
Awesome. I recently just started listening to Ready Player One on Audible, and it's so good. I can't stop listening to it. I keep listening to it on the subway. I keep listening to it walking around, even when I'm doing the dishes. So go get your free book now at audibletrial.com/ambition today to download and keep your book for free. Not audible.com, but audibletrial.com/ambition today. And Toptail. Say you have that idea in your head that you just can't shake, but you need someone to build it. Well, visit toptail.com/ambition today for a free 2-week trial with the top 3% of software developers and designers. You own all the work, you own all the code from anything built during your trial, and you can get a lot done in 2 weeks as someone from the Toptail team will reach out to you almost immediately. That's toptail.com/ambition today to get started today. And now back to this episode of Ambition Today.
You're listening to Ambition Today. Visit us now at siskar.co.
Welcome back. We're here with Jesse Middleton, and we were just talking about WeWork before the break. So, Jesse, what has it been like to witness the firsthand explosive growth of WeWork?
Well, I would say it's been nothing short of amazing. I mean, there are very few companies in the world that see the growth that we went through over the past 6.5 years. And I think that...
And just to be for the audience, how big are they now?
So WeWork was most recently valued at $16 billion. But I think the more interesting thing is that WeWork we now cross over 110 buildings globally, everywhere from Seoul, Korea through New York, and then over to San Francisco and LA, and in Europe, and just opened Latin America. So it's a global phenomenon. And
for those that don't know, real quick, so how would you explain WeWork in 2 sentences?
So WeWork, the way we view it is we're a platform for what we call creators, which are really entrepreneurs, business owners, even artists, people that really want to create their life's work. And what that looks like is a platform that combines space for you to work out of, a community of people that are also creating things for you to do things with, and a service layer where we're actually helping you to create a better company, to create a better business, whether it's helping you gain access to health insurance or helping you find employees or helping you raise capital. These are all services that are offered within the WeWork ecosystem, either directly by WeWork or more often than not, our own community members and partners.
Okay. So going back to that, so what was it like witnessing the growth?
So witnessing the growth of WeWork from the inside is something that it's kind of surreal. And I say that because I think when you're creating it together, you don't see the same curve that people put onto like a chart when you're pitching an investor. So you realize that all of those weeks of working 78 hours a week, where it feels like it's just constantly battling, creating the next thing, opening the next building, getting the next 100 members in. These are all sort of micro pieces of the business. And when you finally take a step back, which I did a few months ago and left WeWork full time, looking at it, you kind of say, wow, when I got involved, there were like 5 or 6 of us in all of, there are 5 or 6 employees at WeWork.
Wow.
There are now probably almost 1,500 employees globally, and more impressive than that is that there are over 60,000 members of WeWork globally. So these are all people creating businesses, creating, kind of what we would say their life's work. And so I think taking a look, kind of backwards, and Steve Jobs, I think, famously said, you can connect the dots behind you, but taking a look backwards, what I realized is that every one of those late evenings, till 1 or 2 in the morning, putting the final touches on a building, when you open the first time, we opened in Los Angeles or San Francisco, a brand new city for us. All of those things combine to create something much bigger than any one of those elements kind of stacked on top of the next. And so I think that it's like when you think about kind of compounded interest in a bank account, it winds up being something much larger than you could have ever imagined from the inside when you do take a step back.
So when you can connect the dots looking back, like Job said, but when you are that close to it day to day, right? And it just feels like these micro milestones, right? How do you gauge the progress, I guess, without taking that step back because you're so close?
Yeah, I think there's 2 ways. One we talked about earlier, which is having faith. So if you're doing things for the right reasons, you're doing it to help, what we always did was to help our members be more successful. Each one of those decisions, when you see those small leaps of success, because you have faith in this working, that will be good for the business overall and for the membership and the community kind of globally. The other thing is that you have to have founders who have incredible vision. They need to be able to, the best founders in the world have this ability to put a pin 5, 6, 7, 10 years out, maybe even longer. If you're looking at somebody like Elon Musk, who's talking about 20, 30, 40 years out, you put a pin out there and you say, that is where we're going. There's no option. We will not get to that point. And when you do that, you realize that even the mistakes that are made get you closer to that point. Even the poor decisions, even the failures in execution get you closer, because you hopefully, if you're an intelligent, hardworking team, which I think WeWork was one of the best in the world, you learn from those mistakes and you do twice as good the next time. And so I think that, that combination of having faith and having leadership that has an incredible vision, those 2 things combined make sure that everybody's moving in the same direction. The truth of the matter is, I don't think you actually want people during that journey to step outside of it too much. We go back to that focus conversation, like stay in it, stay creating, stay doing the next thing, the next task, and work your ass off. And like, it will work. That's what these things, that's the only way to do it. Otherwise you could second guess every single decision you made along the way and you'd never get anywhere.
I think that's great advice. So what's next for WeWork Labs?
So Labs has grown over the years from those first 47 people to a couple thousand people globally. And really the major shift that's happened this last year is that we went from being completely focused on the space first, where each lab's location was sort of its own sort of micro entity, to being a program that is at the smallest kind of cross city. So those 4 or 5 spaces in New York that are lab spaces work together. They share resources. but also kind of cross country and connected around the world, so that when we have a massive demo day in New York around, say, fashion tech or finance tech, we want to bring people together from DC. We want them to come from Boston or from San Francisco, if it makes sense. And we want them to come and participate. And I think it just builds a stronger community, and there's strength in numbers. And so when you have these people all over the world, it's a more interesting place for investors to stop by to look at these early stage companies. It's easier to hire if you're this 2-person company inside of this huge labs program. And ultimately, we think it'll be more valuable for those startups along the way.
So recently you made the move to become a VC at Flybridge. Congratulations, by the way.
Thank you.
So after you did all this community building, right? You have all this experience building community and support systems for startups. How did that experience lend itself to the investing role that you're in now?
So I started investing as an angel about 2 years ago. The truth of the matter is I won't know for another 5 or 6 years if I'm any good at investing. But I think I've backed some great founders, some very smart people, very hardworking people, and that's most important to me today. I think that ultimately the idea of community being a valuable resource, something that is hard to measure, it's an intangible asset to have, that, sort of what that brings to you. It's clearly something that helps to motivate other people to work. It helps them to solve problems. And I think that within the venture world, you see this happen at different stages in different ways. So First Round has their content platform where they're actually creating, amazing posts from great entrepreneurs. And then they're sharing this with the world, right? This is not just for their portfolio. They're actually, the broader venture community is getting access to this, and the broader startup community. I think we're going to focus at Flybridge a bit more on this at a much smaller scale. We want to go very intimate. I want to connect more with those people that were the early employees of some of the big successes that have come out of New York recently. So, Etsy, Tumblr, Buddy Media, these companies that have built incredible businesses and have helped to teach some incredible future entrepreneurs a lot of execution and operation skills. I think there's a valuable community in there that can be pulled together and can learn about sort of the next stage in their career. So some of those people will leave to start new companies. Some of them will leave to work with others who have created new companies. Some of those people will stay and be leaders inside of their existing businesses. But I think there's an opportunity for us to bring that concept of community and that strength in numbers to kind of the next generation of founders. And I saw it firsthand be valuable to all the WeWork Labs members. And I know we can do the same thing here in New York for kind of the next wave of founders here. Yeah,
I think community is so important and it's so easy to overlook, right? But I think that's one of the things I've actually tried to do really, really well here through Founder Institute in New York, is really build that sense of community between the larger ecosystem, the graduates and alumni, the current people in the program. I think community can be a massive asset if done right. I agree with you.
Yeah, and you bring up a good point, which is that combination of the been there, done that people and the up and coming people. And everybody, I'm learning this in the venture world, that I bring a very different view on the world of startups than my partners. They're all 15 plus years older than I am, and they've been in venture for 20 years. So they have a lot of history and a lot of experience, a lot of things I can learn from them. But when I come to the table, and I was just having this conversation with my partner Chip earlier, when I come to the table, one of the things is being naive. It's I can look at a new company or a new product or new idea and say, wow, wouldn't that be amazing if it succeeds? Whereas having spent 20 years in it, they may look at it and say, well, we saw that not succeed before, right? Here's why it didn't work. And that combination is really valuable. And I think when you talk about the community of alumni who have been there, done that, and the current class, say in Founders Institute, there's a ton of value going in both directions. And I think I've said this before to other people, but the best types of mentorships are bi-directional, right? They're symbiotic. There's very few, even if it's a 18-year-old freshman in college and a 50-year-old billionaire entrepreneur, they each have something to teach. One of them has sort of history to teach, and the other one has this view of the world and being in it. They're the Snapchat generation. 50-year-old probably isn't using Snapchat that much. And there's just something very powerful there that they can teach each other.
Yeah, we had Jeff Wald on from Buddy Media, and he talked a lot about the power of being a mentor, but also the value that he gets from his mentees and that two-way directional relationship. That's awesome. So we talked a little bit about venture capital and you and your partners. So what are your personal thoughts about where the venture capital space is right now?
Yeah, so
it's been a weird year since last summer.
Well, I don't know if weird's the right term. I think there's been a shift, and the way I view it is every 7 to 10 years or so, the financial markets change. Lots of things happen in the world in these weird 7-year cycles. But every 7 to 10 years, there's been a major shift for the last couple of generations of startups. And 10 years ago, Amazon Web Services was built, and the cloud kind of became a thing. And now fast forward to today, and even a company like Netflix keeps most of their infrastructure on Amazon, right? Whereas before it had to be on the bare metal. The cost of building a business and a technology dropped significantly, and the speed at which you could do it increased just exponentially. We're at a similar point in time now with this next generation of entrepreneurs with kind of what I view as like the business stack, where you have companies like WeWork, you have companies like what used to be Elon's Odesk is now Upwork, that enable you to scale the different areas of your business the same way that software and technology was able to scale 10 years ago is happening now. And so what you are realizing in venture capital here in New York in particular too, is that people can build more for a lot less. And so you're seeing more really interesting companies show up on the scene in a big way after only having raised, say, $500,000 to $1 million, which used to be $5 million to $10 million.
Right.
And what that means is in the venture world, we're seeing there have to be new ways of thinking about how you invest, because historically $500,000 rounds were friends and family and angels.
VCs didn't even operate there.
Yeah, and the economics, it's a whole nother conversation.
Right.
The economics of venture don't necessarily lend itself well to that unless you plan it out and you actually think about that. So in our latest fund at Flybridge, we want to do most of our investments coming in at the seed round. We're willing to write a check as down at $500,000. We're willing to come in pre-product launch. We want to participate there. We're also fortunate enough to have, this is our fourth fund, to be able to actually participate on the way up. So if somebody does really well at that, we can then come in and lead their A. We can then participate in their B. And that means, though, that we need to be looking at companies even earlier. We need to find new metrics to measure success by. It may not be yet that somebody has meaningful revenue if they just have an alpha product out there, but we can look at how do their customers view it? How valuable do they find it? And a lot of that measurement comes from that experience that I talk about that my partners have. They've seen all of these companies kind of go through this. And so we can look at it that way. So weird is probably not the word I would use. I would say, though, that what we're seeing is that venture needs to go earlier, and it needs to be more helpful, and it needs to be more open-minded. And I think, I'm very excited to do that. I just spent 5.5 years in WeWork looking at every early stage company that I could find and seeing what worked well and what didn't. And so I think thinking about how to help those companies at the earliest stage going forward is really important to my partners and I.
So you talked about waves there. So I guess it does feel, I guess when I said weird, so it does feel like we have switched waves, right? Do you feel that have mobile apps peaked? What do you see coming next? Is it virtual reality, bots? Is it something like blockchain? Like where do you see the things going there?
I've only been in venture now for a few months.
Can you see the future?
Yeah, if I could see the future, I'd be. I think that I don't know if mobile apps are done, if they've peaked or not. I mean, I don't think that they have. I think people are still pretty enamored by their phone. And we'll see what Apple comes out with today with the next generation of the phone. But what I do think is interesting is that we're finding that technology is becoming more and more pervasive in places where we didn't used to have it. And so you don't have to look at your screen anymore. I think about like Apple Pay or I think Android Pay, the idea that you can hold your phone up in a taxi cab. Sure, Uber is an amazing experience and I use it all the time, but I open my phone up, I unlock it, I open the app, I request the car, and that works to solve a major pain point. But it's almost just as valuable to be able to get into a cab that happens to be outside the building here and then wave my phone at the little scanner and I don't have to touch anything, right? Yeah. There's no unlocking. It's just hold the phone up. I think that AR and VR will enable even more of these interactions. I think that things like Alexa and Amazon Echo and Microsoft Cortana and all these AI products are also going to help enable some of these kind of, call it screenless applications or interfaceless applications but I don't know that it's one or the other at this stage. I think that certain products lend themselves very well to being on a mobile app, being on your phone, being on the screen. I recently bought a car for the first time in a long time when I had my son, and we use navigation apps. I mean, I cannot imagine any point in the next few years, at least, where I won't have my phone stuck to my dashboard, showing me Google Maps, or Waze or whatever your choice is. But I do think there are other things where, voice control of my stereo is just a no-brainer. I don't need an app for that.
Or to press a button on the steering wheel.
Yeah, you press a button on the steering wheel, you just speak to the car and you tell it what you want. So I think, while I do think that some of these new technologies are really fascinating, and I've put on the Vive and I've put on the Microsoft HoloLens, and I think they're incredible, and they're just what's possible has just been exploding over the last couple of years now. I don't think we're at a point yet where people are going to turn around and throw their phones out. But I do think that we are at a moment in time where entrepreneurs are going to have a really unique opportunity to just rethink how people built technology and how people built interfaces in the last 10 years and how that's going to shift for the next 10. And, I haven't yet seen it. I'm sure it's out there, though. I'm sure somebody's doing something that's just going to wow me, and I hope I'll see it early enough and that we'll get to back it. But I think it's I'm pretty excited about that.
It's an exciting time for sure. You should read Ready Player One if you haven't.
I will. I'll download it on Audible.
Fascinating view of what the world could be like if VR takes off in one direction.
I love it.
All right, so this is episode 20. So if you're listening, now it's your turn. Tweet me at the Siskar on Twitter, or send me an email from siskar.co with your Ambition Today question of the day, and we will have it on future episodes. So Jesse, today it's time for the Ambition Today question of the day, which is, what does ambition mean to you, and how has it driven you?
It's very interesting. I think ambition is a very personal thing. So I think the question more generally, what does ambition mean to people, is probably harder to define. But I think to me, ambition it's a desire to sort of create something bigger than myself. So I think something that I've more recently started to think more about now that my son is 6 months old is sort of, how do I empower my son and my family and my friends to do more, right? How do I create something that lets them create more? And I think that when I think about ambition, it's that drive that really it's kind of somewhere in the back of my head. It's something it's the thing that keeps me up at night sometimes, the thing that wakes me up in the morning really early, even if I'm hungover, and gets me kind of going for the day, is this desire to create something more. And so I think one of the reasons I moved over to venture capital is my ability to now help a number of other people do that same thing in hopefully a very meaningful way, whether it's capital that they need or advice or connections. This is something that, I can now do from within the fund. And I only hope that we back companies and founders who make the world a better place for everybody else involved. And so I mean, that's kind of what ambition is to me.
I love it. So if you enjoy this show and you have your own ambitions, then please go to the iTunes store and leave a review. If you don't know how to do that, you can visit siskar.co/review. Also, if you like this episode, screenshot it, share it on Instagram with your favorite quote, and tag me and Jesse in it for a response. Lastly, the show notes for this episode with everything me and Jesse just talked about, including links, will be up on siskar.co, so you can check there as well. So Jesse, I want to thank you. This has been an incredible and masterly insightful episode of Ambition Today. Thank you for coming on.
Kevin, thank you so much for having me.
Where can people go find out more about you? Twitter, blog?
They can find me on Twitter at Sarcasm, missing the first A, so at SRCASM. I've had this name forever. Or jessemiddleton.com has a lot of content that I've written over the last few years.
I love the Twitter handle. All right, well, stay curious, everyone, and I will see you all on the next episode of Ambition Today.
Thanks for listening to this episode of Ambition Today with your host, Kevin Siskar. For more great content and to stay up to date, visit www.siskar.co. We'll catch you next time.